folks. Welcome to the Short Vol Show live. My name is Dave, and this is a Sunday evening edition of your favorite volatility show. And, you know, I've gotten some comments in the past from people saying, like, you know, you're not giving enough content at once. I just want to get in quick and get out. Well, this isn't one of those videos. This is more of a kind of chilling with the homies type thing where we're just kind of thinking about what we want to do next week, coming into the week. Now, I realize that it's the Super Bowl in the U.S., and some people, I'm not going to be able to compete with that with most people. But I just wanted to come on for a Sunday night and kind of remind people that Sunday night is when we can see the futures reopen and we can kind of, quote unquote, take stock of what's going on. And remember, last weekend, what happened was we came in Sunday and everything was way down and it was scary and it was spiking. And my idea coming into this was possibly that, like, usually stuff doesn't happen the same over and over. And sure enough, futures are currently up right now. That doesn't mean that tomorrow morning when we come in, they won't be still up. But for now, futures are up, vol's in slightly. We're still in backwardation. We need more than up a little bit for vol to come in. Of course, if vol stayed here, if the indices stayed here up like 8 points and went up 8 points every day for, you know, a week or something, then volatility would certainly come crashing in. But right now we're kind of in a holding pattern. In the news, let's talk about some news stories. Now, one big thing that happened over the weekend, I don't know if you noticed, there's on Twitter, there's a guy called Zero Hedge. It bills itself as like a news story, but he's actually a conservative biased site, Zero Hedge. And Zero Hedge, and let me thank you, by the way, to James for the super chat. That's very, very kind of you. I much appreciate that. Let's see. Actually, I got two from James Knight. I'm not sure if that was today or yesterday, but thank you for the super chat. It's always appreciated, and it's nice to know that you guys are around. But Zero Hedge. Okay, so Zero Hedge is a conservative biased news site that posts stock market stuff, and sometimes they'll put volatility stuff on. And usually, as far as I'm concerned, it's not usually right, but they've been banned from Twitter, and I'm never happy with people being banned from Twitter, you know, unless they're doing something very, very illegal, like threatening physical violence or something like that. I don't like it. I don't like it when Alex Jones was banned from Twitter. You know, I find Alex Jones amusing. I really didn't like him, but then I saw him on Joe Rogan, and I was like, well, maybe he's not so bad. But mostly I just found him amusing. Of course, he had a bad take on the Sandy Hook thing, and that was a real debacle for him. But everybody pretty much knows that Alex Jones was banned, what was it, almost a year ago now, from most social media. Well, Zero Hedge, never as big as Alex Jones, but still had its place in our community in the market, got banned. And I want to come out against that because I believe in freedom of speech, even when it's stuff that I don't like, which I didn't really like Zero Hedge. I had him blocked. I didn't even know he was banned until somebody tweeted it at me because I had him blocked. But either way, don't like to see people banned. We need freedom of ideas. I want to see ideas even when I disagree with them, because maybe my mind will be changed by people. Who knows? All right, so far, the markets are not way down. I was kind of afraid they'd be way down, but, you know, it's a funny thing that happens when everybody thinks one thing is going to happen. Sometimes it doesn't really happen. It kind of felt like it was the end of the world on Friday. And, of course, now we come in. Futures are unched. If we pull up the E-minis right now, they're up 350, relatively unchanged. It looked like they were up a little bit more when we started. Remember, futures open at 6 o'clock on Sunday nights, and we're a little off the highs here. You can see the opening range was from 3222 up to 3234. And we're kind of in the middle of that right now, but kind of like nothing is going on. And remember, when nothing's going on, that kind of favors the short vol crowd because to keep volatility elevated and to keep us in where we are right now, which is backwardation, we need continued acceleration to the downside, which is certainly not what's happening right now. Let's take a look at the term structure real quick. And like I said, I'm just on here right now to just chill out and talk about stuff. I did, by the way, reach out to ProShares, and I do have a dialogue going on with them right now, and I'm hopeful that we can get someone from them to come on the show, or at least for them to make some comment for us. This is, of course, in regards to that press release that came out earlier this week, where they were asking for basically for the public support of their leveraged funds, which SEC was looking to clamp down, to regulate. Many of you might have noticed there's different levels of ability to trade in different accounts, and you may have noticed, like if you tried to do certain stuff in your 401k account or IRA account, you can't do the same stuff that you can do in your trading account. For example, like my 401k, I'm not allowed to trade options in, and then certain funds, they won't let you trade them. So, for example, I don't think I can trade, I'm not sure if I can trade UVXY or not in my Fidelity account, but certainly for leveraged funds, they made me jump through a bunch of hoops. You had to sign off on all this stuff, and I think you actually had to call them so that they could read something to you. Well, they're trying to tighten that stuff up for ProShares, and I had a whole bunch of people coming on and saying, you know, Dave, you got to come out and talk about this. And there's not a whole lot to talk about. It's just, you know, the government trying to tell us that we're not capable of managing ourselves and that they're going to manage us for ourselves. Now, it's the same thing, you know, with other things like, you know, I don't know, drugs or something. We have to protect you from yourself. Now, for most of people that follow me here, this isn't going to make a big difference, even if they do make more hoops for these funds, because most of us here qualify for trading that stuff. And most of us can, you know, if you are trading options, you've probably reached that threshold level of experience that you're going to easily qualify for these things. You know how there's like different levels of options trading? Like, first of all, they'll let you, like, you can only do covered calls is one level, and then another level is like the highest level is to sell naked options, and they don't want people doing that unless they understand what they're doing. And I get that. A lot of that is by brokerage basis, and I get that. You know, you can get in a lot of trouble selling naked options if you don't understand what's going on, and certainly the regulations that govern these things on the exchange level, that being how much your margin requirements are by the exchanges to sell naked options, you could easily get in a lot of trouble. Those regulations are not that strict. And let's say, you know, you're somebody who has, I don't know, inherited a couple $100,000, you have it in this brokerage account, and you start messing around with options, you certainly could get in a lot of trouble with selling naked options. And so I think that stuff is good in a way. And so we're going to have to see what exactly the SEC proposes here. Everybody's trying to cover each other, I think. You know, it's funny how the left is thought of, and certainly Elizabeth Warren and company don't help this perception, but the left is seen as, coming in to regulate everything, and they're going to, block trading and tax us all and everything. But all of a sudden we have the SEC coming out under the Trump administration to regulate ETFs. It's kind of like you expect that. It's almost like you'd expect that under the more liberal administrations. But I guess it goes to show the SEC's operating on its own very slow timetable, and they've talked about this before, and they've maybe finally gotten around to it. But the thing is, let's look specifically here at this ProShares circular. And it came to me from Learning to Swim. So thank you, Learning to Swim, for posting this. And let's see if we can find. But essentially, ProShares was calling for comment and talking about how this is an upcoming thing. Did I get the right ProShares there? ProShares. There we go. Yeah, so here we go. You may soon lose your ability to buy leveraged and inverse funds. The Security and Exchange Commission has proposed new regulations that can impact investors in leveraged and inverse funds, such as those offered by ProShares. Now, that's all kind of vague a little bit. So we kind of have to wait and see what's going to happen a little bit here. But it would be interesting to get somebody from ProShares to come on and talk to us about, their point of view on all this stuff. ProShares Pet Care ETF. The pause. See, there's an ETF for the pet care industry. Sorry, it's not funny. It's very serious. What the heck? Yeah. Wall Street Journal. Yeah, you see, a lot of these articles and stuff is from end of last year. So let's see. Yeah, a lot of that stuff from the end of last year. So, I mean, like I said, I've reached out to them. Hopefully, we're going to get something with the actual company to come out and talk to us. So stay tuned for that. I am, like I said, I've reached out to them. They responded to me. We're going to see where it goes from there. Hopefully, it goes somewhere. And, different companies and different people you interview, some people are very relaxed and are like, yeah, just come on and whatever. Let's do it live, Let's do it live. And you come on and they're just, it's very easy to do the interview. Other people are very, they're very concerned about their image and they want to have varying levels of control over an interview. I've had people where, I had to submit questions before, or, you don't actually talk to the person you want to interview. You talk to their handlers, their bookers. People, bigger, more important people have bookers who book the interview and who lay the ground rules out and all this stuff. It really depends on, Tony Rack. Yes, futures up 8 right now. So NASDAQ up 21, E-minis up 8. So everything's cool right now. Now, it certainly could open down tomorrow, but for now, everything's cool. And, sometimes you get a situation where, like, only up 8 means that we're kind of down because we were down so much and there's momentum to the downside. But we've really only had, like, we've had a couple down days in the last weeks, but it was really like it wasn't like we've been cruising down a ton every day. And so, we'll have to see if I don't consider it to be a trend down as of yet, but just because we're up 8 now doesn't mean we won't be down by tomorrow morning. However, at this point, nothing's going on, and I like that. I did want to, if we do get another spike in the VIX, I will add to the position. I don't have like a full position worth of stuff on right now. Yeah, I guess my point, we have been down a few days. So, in a sense, once we start going down a lot of days in a row, then like up 8 means that, we can get just kind of sucked down, because once we're in a trend of moving down lower every day, then the trend continues unless there's some force to really break it to the upside. And I'm not really convinced that we're in a trend. I mean, if you look to like, in 2000 when we were down every day for months, that's kind of a trend. Plunge crew will be out. I think I don't know. I'm not good at predicting the market, so my thoughts don't really matter. My 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 general thoughts on the market is the structure of the market these days is such that think about what happens every week in the market. People have 401ks and their paycheck comes out every week. Now, it depends on how it's set up because if you got paid Friday and you have like let's say 5% goes to your 401k, maybe they didn't not every company is going to deposit that Friday. My point is that so many people have automatic investments these days that there's this money trickling into the market all the time. And so for the market to go lower, you first have to offset all that buying that happens, like this regular buying every week from everybody's paychecks. You have to offset that. And that's something in itself. We're coming into earnings season, big time. And, interestingly, Tesla was up on Friday. Amazon was up over $100 on Friday. If this is the recession, Tesla sure hasn't found it out yet. So, and once again, my opinion is just one person's opinion. That's 1/10 of all the people that are gathered here right now. So my opinion doesn't really matter. And I'm terrible. I'm the worst market timer, and I know that. That's why I don't focus on timing the market. But I just want you to think of the possibilities when you come into Monday. A lot of people are freaked out. A lot of followers of this channel are, pretty much always short some sort of volatility, and so they got hurt. They got hurt last week, and the question is, do I want to continue getting hurt? Is this trend gonna continue where I just get hurt? Should I be adding to my short, or do I just want to bail out of my short and stop the pain? And my opinion on all that is the higher we go with these ETPs. Now the VIX moves up and down, and but all the ETPs, they slowly move lower. So the higher these things go, it's always an opportunity when they spike to get on that short train. Now, we could be in a volatile situation for a month or two, and or that could have been it Friday, and we could just roll back down. I mean, look at the charts. We've been rolling down for a long time. It's like a beautiful down move we've had over the last 6 months. Let's look at VXX, for example, or let's go to UVXY. We've had a beautiful roll down, and maybe we got this pop here, and that's the end of it. Let me get out of the way here. That perfectly could happen. In which case, you're going to be kicking yourself if you didn't sell anything into this, or if you covered right here and got long, and then it just goes in your face. That's the one. I don't make recommendations about what anybody should do, but other than getting along a bunch of volatility here seems dangerous unless you're really good at timing. Google trade structure. Well, let's look at Google. So Google's backed off like everything else. Let's look at just general news. I like just looking at general news on Thinkorswim here. And sure enough, it says Alphabet reports earnings. On Monday, Google parent Alphabet rounds out the latest quarterly earnings season for the tech giants, a stretch that's seen blowout results for Apple, Microsoft, and Amazon, but a slightly less compelling report from Facebook. Now, as you guys know or should know, great earnings, bad earnings, mediocre earnings, the stock could go up, down, or sideways. Vol is up to 57% in the front month, which sounds pretty high for a $1,400 stock. There is some premium in this stuff. But once again, looking at the chart here, we have backed off the highs a bit, and this has had a big run already. Recently. So, like I said, I'm not a stock picker. So whatever I say will be. If I say something, do the opposite of it. But just an example of a bullish trade. Well, it looks like the 1360 level is some sort of level there, so you could sell some puts down there. So if we were to look at, I don't know, go out to like 6 March, maybe you sell the 1380 put, buy the 13 put, something like that as a bullish trade. I would like. You're betting 6,000 to make 2,000. I'd rather sell puts than put spreads. Just you're short the 1380 puts or just that line somehow. You mean? The other thing is, of course, like just just buying a vertical. So if you're bullish, you could buy something like some vertical that's right in the middle of things. So the at the money is the 1440 strike. So something like the 1420, 1450 vertical. Buy the 1420. Excuse me. Sell the 1450. So there's 30. So there's $30 between the strikes. You're paying half of that. So it's a 1-to-1 bet if you were to buy something like this. You're short the 1340, 1380 put. I like that because when and like I said, I'm not a great chart guy or anything, but if you just a casual glance at this chart, looks like certainly down at 1360, it looks like there's support there. We've already pulled off the highs, and so it's not like we're at this really high highs at the very top. We're already off of that, and so that, in my mind, means it's less likely to come crashing lower. I was looking at like March just to give you time if you're wrong for stuff to happen. If you are selling, because with a vertical spread, it doesn't really matter as much as if you're just like straight up selling. I mean, you could straight up sell, 7 Feb puts and just, go for that earnings thing. You could just sell the 1380 puts in the front week, and that the trade's either winner or loser at the end of the week. And I would definitely sell a spread as opposed to naked puts. Obviously, it depends on how risk averse you are. The other thing is, you could take a little less risk and go down to like the 1300 strike. Sell a 1300 put for $3, something like that. I would look though at like past earnings, what things did. It looks like here this past earnings, not that much happened with Google. I know I did follow this a couple earnings ago. This earnings before that gap down from 1300 to 1180, right? All right. Yeah, if it starts peaking at the open, I'll just roll down. So let's see. Is earnings after the close? Let's see. I go sometimes to the StockTwits website because it has like an earnings calendar on there, which is interesting to look at sometimes. Watch list. Let's look at Google on StockTwits and see what they're saying about it right there. See what people are talking about in the chat. I love StockTwits. I love hanging out in the chat rooms and talking to people and stuff like that. You know, it's funny. You'll be in like Google and you'll see someone in there that you know from like some other thread, and then you'll see some people are in like every thread. I mean, I just stuck to like one thread for a really long time, but there will be some people that will be only in Google, and like the whole time they've been on StockTwits, they just hang out in Google, and that's it. And there's other people that are all over the board, like Cheese and Wine here. He's all over the board. So a lot of people making YouTube videos these days on StockTwits, and a lot of them are just awful. All right, so this guy's bullish Google too. Discord. Yeah. I might make a Discord. That'd be fun. I don't want to like charge anybody anything though, because it drives me crazy that Enhanced Investor, they're charging people $99 to go on Discord, and then they post these trades, and it's almost like they post a trade after the day, like, oh, yesterday we said this was going to go up and it went up, and it's scam like these people. $99 a person per month. What, every 25 people you sign up, you can get a new mortgage for a house or something? I think that's outrageous. Yeah, I know Super Bowl is coming up. Thanks for coming on, Man Accounts. Best of luck for tomorrow. But I'm just happy that we are not tanking right now. E-mini's up 11. So, two things to say about that. One, we might be down by tomorrow morning, but well, more than two things. Secondly, the short that I put on a short in VXX Friday, and I'm looking to add to it. One of the things is I added money to my account a couple days ago, and it doesn't clear until Monday. It's either Monday or Tuesday. So I'm like, come on, stay spiked until the money clears. I can't be the only one who's been through that sort of thing. And let's take a look at what I actually have on. So what I have on right now is I have the 17 April 1815 put spread. So if I get out of the way here, you can see the position. So I'm long the 18 puts and short the 15 puts. And right now the account has $7,000 in it, but only $4,000 is available because I took out money, I put in money, I was bouncing all this money around, and so I have to wait for that $3,000 to be available. I think the coronavirus is affecting markets right now, certainly. You guys, I put it out on Twitter, but I love for you guys to check out. And no, I don't know this guy. I've tried to reach out to him, but he hasn't responded. So I don't know this guy. He doesn't know me, but I think he's a great YouTuber. I think he's South African, but he lived in China for a really long time. I think he might be in like Taipei right now, but he makes great videos about China in general. But right now he's been doing ones about the coronavirus and how China has not been as transparent as they should. Check out this guy Serpentenza on YouTube. He's great. He's married to a Chinese woman, and he and this other guy have this show called ATV China. And what they do is they cruise around on motorcycles, and it's kind of cool because, for somebody who's from the U.S. and China, you can't blend in no matter what. It's kind of like if you're Chinese in the U.S., you can't blend in no matter what, except when they ride their motorcycles around, they have motorcycle helmets on, so they totally blend in. And these guys speak Chinese fluently. They're both married to Chinese women, but I always like watching the channel because they let you know what it really is like to live in China. And I think Serpentenza has moved out of the country for now, but he's certainly been very critical of the government, and I tend to feel like he must not be living in China right now, because I know that the government is watching him. He's a big enough YouTuber that the government is watching him. Let's see. Serpentenza right now has 600,000 subscribers, and I think he was the first China YouTuber. I think he was the first like big China YouTuber. The other show he has is ATV. I think ATV China is the one, I think. Yeah, and these guys go around on their motorcycles, and they'll talk about, like, anything you wondered about China, like, oh, do they eat dogs in China? And he'll talk about how, like, certain province they go and they're serving like dog on the menu or something like that. But he gives a very positive view, though, in many cases of China, and talks about the good things about it. It's not just like, oh, the rest of China sucks. It's like, no, it creates mostly a positive view about China, but it also just talks about the realities of, of everything there. And, no country's perfect. Certainly the United States is not. But he's recently had some good videos on, the coronavirus and what's going on with that. So check that out. So let's take a look at Drudge Report. Once again, to recap. Hey, what's up, Greg? Nice to see you. To recap, I'm upset about Zero Hedge getting kicked off of Twitter. Although I don't like Zero Hedge, I don't think they should be kicking people off Twitter, because I don't really think he did anything that bad. It was something to do with his coverage of the coronavirus, and it's unfortunate. Here we go. Let's take a look at it. It's even on here. Financial market website Zero Hedge knocked off Twitter over coronavirus story. Twitter has banned financial market website Zero Hedge from the social media platform after it published an article linking a Chinese scientist to the outbreak of the fast-spreading coronavirus. The move against the website came as the coronavirus stoked a wave of anti-China sentiment. Now, I think you can be critical of China here in not being as transparent as they should have been with this virus. When there's something that's dangerously spreading, you need to shine a light on it. That's how you contain it. And it's scary. There was news over the weekend that some student, in Boston, they have the first case of the virus in Boston, and I'm in Boston, so it's scary. Market Trader says VIX to 30 next week. Now, I would like VIX to 30, even though I'm short right now, because I want a chance to really strap it on. Let's look again at back to the VIX for a second, because I want to point something out that was happening on Friday. They really cranked up option prices. And, for example, these 7 puts... Well, right now the market, look at that beautiful market, 40-cent bid at 80 cents. But with VXX up $1.60, the 7 puts that I'm always talking about in January, and let me fix my screen so we can see it here. The 7 puts were up with VXX up $1.60. The Jan 7 puts were up. So they cranked the value of these. Now, so these things perform great to the upside, but guess what? People came in and bought like 500 and paying 50 cents. When this thing goes back down, these things are going to perform terribly. They're going to go nowhere. If they were up since 15, when we're back to 15, these things are going to get killed. They're not going to go up at all. Just to explain, with VXX trading 15 even or 14, let's say 15 even, the market on these puts was like 44-cent bid at 45. Now up here, up $1.60, up $1.20 from 15, let's say, the market was 49-cent bid at 50. So the puts were up like 5-10 cents. That doesn't sound like a lot, but when you've got a couple hundred of them, it makes a difference. And so be very careful out there if you're going to buy put options on a spike in these products because they crank the heck out of them. Now, the way to sidestep that is to trade vertical spreads, because spreads, they've cranked both options. So you're buying one option, you're selling another. So if they crank them both, it doesn't really matter. They offset each other. But the other thing to do is to sell calls. Now, we know that call spreads and put spreads are two sides of the same coin, but if you have the ability to sell calls or sell a very wide call vertical, it's probably a better deal because volatility, once again, is cranked right now in these options. So if you have a decent sized account and you can sell a couple naked calls maybe, and maybe protect yourself. One thing I'll do if I sell naked calls, like let's say I chose to sell some calls a little bit farther, like far out, let's say like March, right? If I chose to sell some naked calls, like let's say I sold the March 17 call in VXX. Well, then I can go in. I have a naked option on, but I can go in and look at the front week, right? And then it comes to be like Wednesday, Thursday, I can buy some front week calls for like 5 cents, 2 cents, 1 cent, way out of the money calls, and I'm effectively hedging my position, but I'm just buying this junk that's really cheap to hedge it with. I mean, as the week goes on, these front week calls, they collapse in value, and you can hedge any naked options you have with this cheapo stuff. You could also buy cheapo call spreads. I generally won't recommend for people to sell naked options because I want people to be careful. But very careful on buying puts when we get a spike. If you're I would suggest buying put spreads or a closer to at the money puts. If you're buying out of the money puts, a lot of times they're just going to crank those things up so much that they're really, even if you're right, the worst thing you want is to be right. You're like, I was right. It was the top of the VIX spike. I bought these puts. You're right. It goes your way and you don't make money. That's like the worst thing ever. Now, that's going to happen all the time to people who get long VIX stuff, right? Because there's a lot of stuff going against you with getting long the stuff. You have to time it exactly right and get out during the spike. But we don't want that to happen to you, that you're right and yet you don't make money. So to avoid that, I would trade spreads or sell calls to get short so that you've got that time decay on your side. Not only the time decay, but also the collapse in volatility. It's a double whammy. Collapse in volatility means the underlying move is lower, but it also means the option prices come way in. So be selective in what you buy. Now, the options that are closer expiring, when you're dealing with closer to expiration options, like the weeklies that are a week out or something, those options have less. They're less sensitive to volatility crush than the farther out options. That's one of the principles of options, that options that are closer to expiration have less vega attached to them. Vega is the money you'd make or lose for a 1 point move in volatility. If you've got, a Jan option that's 300 days till expiration, that's much more sensitive to a volatility change than an option that's a week till expiration. So be sensitive about that. When nothing's going on, it can be a good time to buy these far out Jan puts when volatility's in and stuff. But when we get a spike like this, it's almost better to wait a day or two until the dust settles a little bit before you jump on the train. It's not like you've totally missed the train if you don't catch the total top of volatility, because if you wait a day, option prices come in and you might get the same or better prices than if you bought a put at the very top. So something to think about. So it's kind of false of alarm here today. We didn't get that big down move that we got last weekend. Last weekend it was like, oh no, Sunday we came and it was like, oh, the end of the world. Now stuff is up a teeny bit. We don't know if it will still be up tomorrow morning, but for now the coast is clear. Nothing's going on. Nothing to really see here. Time to go watch the Super Bowl. So there you have it. So if there's no more pressing questions from anybody right now, I am going to go check it out. None of my teams are in it right now. I'm from New England. I'm a Patriots fan. I know it's boring for non-Patriots fans, but I'll still watch it. All right, guys. Thank you. Do watch Greg's channel. Awesome stuff. I try to catch it every day after the close. Let me see if I can get a link for you for that one. And I am hoping that we are going to have some sort of exclusive content from ProShares this week. I'm hopeful. Like I said, I'm in a dialogue with them. I don't want to jinx it by saying anything else. All right, so here I'm going to put a link to Greg's channel, and you can check him out during the work week. He's like, I think it's 3 to 5 every trading day. Let's put him up here. He's always been very supportive of me. There you go. And thanks, guys. Best of luck trading. If you have questions that you didn't put in and you remember right after we get them off the air or something, just leave them in the chat or on the comments below. And I do see that stuff, and I will answer it. I'm not so big that I can't answer your questions. So thank you. Have fun with the Super Bowl, whoever you're rooting for. And I'll see you in the next one.